please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are up and about 20 points higher from yesterday's close and about 30 odd points from the lows of the session today. It's essentially going in line with what the overnight session was. Overnight, essentially nothing happened. I mean, stock markets were flat. Yields were shot by about 1 basis points to reach that 3% mark, the 10-year benchmark. Oil sold off, rebounded. Commodities, of course, was the story. I mean, especially aluminum saw that big crack which came in after that relentless rise that we've seen. And I think that is affecting a fair bit of commodity stocks here, Vedanta, Hindalco, Nalco, etc. And that's the focus of over the next 60 minutes. We have a global guest joining us to take that conversation forward. But just a quick word on sectors. The pharmaceutical index is up 1.25%. The energy index is up about 1%, and you got the real estate and private bank index, which are up about 0.6, 0.7 odd percent. So those are the four areas where there is some traction, but beyond that, not very much at all. Nothing on the downside of any great significance, except the metal index, which I already spoke about, weighed down by those non-ferrous stocks. Ekta, morning.
Hi Prashant, absolutely. So it's turning out to be a day which is actually dominated by what's happening in the commodity space. So the Nifty Metals index, like you can see, is down around 2%. Talking about stocks which are in focus, we have Hindalco, which is the top loser on the Nifty, which is down over around 7% Nalco from the broader markets down around 8% because of the aluminium drop in prices, and something like a Reliance Naval and Engineering, which continues to be in focus. And separately from the pharmaceutical space, all is not well for a couple of stocks. So something like a Suven Life, which is down around 6% on the back of possible observations for its Medak unit, and something like Alembic Pharma, which has got that go ahead, so about 500 rupees for that one. But nonetheless, we're going to be discussing all this and more in the next 1 hour. Let's take you through some technical calls then. We have Sudarshan Sukhani joining in this morning for that. Sudarshan, hi, morning, over to you. So what would you be recommending, one on the Nifty as well as on stocks?
Yeah, good morning. See, on the Nifty, we have a benchmark now. Yesterday's high, that was 10,640. So should the Nifty cross 10,640, we'll become buyers, because that would be an affirmation of strength. So that would be a buying opportunity, and the view would be that another 100 or 150 points are coming in. Till then, the markets are choppy and range bound. So the trade is primarily to keep quiet and not do anything and step aside.
Sudarshan, in terms of stocks, what would you trade?
Yeah, yes, of course. Prashant, stocks always give an opportunity. Yes Bank is a buying opportunity. Yes Bank has very attractive chart patterns. It could outperform the banking sector. I think Yes Bank is a buy, not just for today, which is what we are recommending. Somebody who's looking at a positional trade could buy Yes Bank and hold for a few weeks. That's the first in our list. Motherson Sumi is a buy for today. The stock probably has finished its decline and downtrend, is showing reasonable momentum. And the third is also a buying idea, that's Dish TV. Dish TV is now rallying after that big bear market. Every day it notches up some gains. So two momentum buys, Dish TV and Motherson Sumi, and one buy for today as well as for a longer term, Yes Bank.
Okay. All right, well, let's get in some Twitter queries now, Sudarshan. The first one is Ganesh, who has 2,120 shares of Tata Motors at 359, wants to know the view on the stock.
Well, I'm downbeat and bearish on Tata Motors. I have been for a very long time, and the stock has been falling. So it is possible that at some point it will bottom out, but we don't know what that point is. So I can't say what the gentleman should do. I can only say that the outlook for the medium term is not bright. It's not cheerful.
We've got one more question. Ibrahim has 1,000 shares of Bharat Financial. He's paid 1,055 rupees each for them, and he basically wants to know whether he should hold or sell. Sudarshan, Bharat Financial.
See, what we paid for a stock is irrelevant to the markets today. But Bharat Financial is part of the NBFC group, which I think will underperform this year. So if he can, he should sell and switch to IT, Pharma, Reliance. He should get out of NBFCs.
Okay, fair enough, Sudarshan. Thanks very much. We speak again soon on the show later. We will get some F&O trading strategies as well. Gaurav Bissa of LKP is with us. Gaurav, good morning. Your thoughts on, I mean, the lack of a move we're seeing in the market. Have you got any thoughts on the index, and what would you trade in terms of stocks?
Good morning. For Nifty, the trade is going to be quite difficult for the reason that we have seen there's a lot of resistance that we are seeing at 10,640, 630 mark. If we are to sustain above these levels, only then we can expect a decent upside of 10,900 and above. A lot of fighting that we saw in the April month for the series, entire series in 10,700 strike call option. So option wise also it is having a lot of resistance. Technically also it has a good resistance at these levels. So for Nifty it's buy on dips. For Bank Nifty, however, it has been underperforming last few trading session. Today it's sustained 25,000 mark. 25,000 put has seen a lot of writing in the Bank Nifty. If this level is sustained, we can expect levels of 25,250, 25,300. For me, that will be a more clearer trade. One can have a stop loss of 24,950 on the upside. 250, 300 points jump cannot be ruled out by expiry. So that would be the trade for index. As far as the individual recommendations are concerned, I also have a recommendation on Yes Bank. It's already moved up quite a bit. Buy around 325, have a stop loss of 321. On the upside, tires of 335 can be seen. Second would be buy on Strides Arcola. Today, pharma space is buzzing quite a lot. We are seeing consistent long positions getting built in Strides Arcola. Today, a 2% OI addition has been seen. On the verge of a good breakout on daily charts, one can have a stop loss of 648. On the upside, 670 can be seen. Sole sell recommendation would be on IndusInd Bank. Even though the bank is looking a little bit interesting, IndusInd Bank has seen some amount of long unwinding at higher levels. With the stop loss of 1880, one can short it for tires of 1820.
Gaurav, thanks very much. Appreciate you joining in with those trades. We will speak again soon. There is data coming in terms of user additions, telecom user additions. Bharti's are at 41.7 lakh users. RelJio's are at 87.4. They're all higher than what they added last month, which is the preceding month. And Idea is also coming in 44.2 compared to 11.4. This is month-on-month addition that we are talking about. We'd maybe get Rima to put these numbers in perspective, and we'll do that in a bit. Let's take our first break on the show, though. I mean, 13 points on the Nifty, so there is a little bit of climb down which has happened. 10 points from when we started. 10,597 is where the Nifty is at.
Well, for the mid-cap index, we're up around 0.3% currently. We have a good advance decline ratio on our hands as well. So around 1,140 stocks advancing to around 850 stocks declining. So we currently stand at that level. It's all about what's happening with the metal stocks. So Hindalco is currently the top loser on the Nifty, down around 7.7%. Bharti Infratel, which is reacting to its numbers, is also quite sluggish. So it's down around 1.5%. And Bharti Airtel, which comes out with numbers today, is down around 0.7% ahead of its numbers. It is expected to probably be a loss on the bottom line, so maybe there is some amount of trepidation ahead of that. But we do have Manisha joining in to discuss what's happening in the commodity and currency space, and no prizes for guessing that she has a lot on her plate today, aluminium as well as sugar.
Oh, well, absolutely. Let's start with the aluminum prices first. And what a gain that we've seen in the last couple of weeks onto that one. 25% up if you don't count yesterday. But yesterday overnight, we have seen prices come down by nearly 6 to 7%. At one point in time, it was down 8.5% as well. So that's the kind of volatility that we have seen come in for that metal. Well, of course, the gains were coming in on the back of US sanctions on Russia and Rusal. And Rusal produces nearly 6 to 7% of the global aluminum. And then, of course, we did see statements coming in from LME and CME on how they have restricted the supplies from Rusal. And then, of course, following that, there was force majeure also declared from Glencore and Rio Tinto on some of those aluminum supplies. So plenty has happened in aluminum. But now with the US coming out and saying that they are giving a wider window to the companies to wind up their businesses with Rusal is something that really seems to have worked in favor. And we have seen the Rusal stock go up by 30% overnight, and the aluminum prices have declined quite sharply. Even today in the Asian markets, as you can see, 0.5% down onto that one. But joining us then is Peter McQuarrie, who is CEO at Exim Australia, and he joins us to talk about aluminum and other commodities as well. Peter, hi, thank you so much for joining us. First of all, let's start with crude oil prices though, because we are trading at a new 3.5-year highs onto that one, and there are various reports on suggesting on how $80 could be a possibility soon. What is your sense? How soon can we see 80 and how sustainable would that be?
I wouldn't be surprised to be close to that number by the next OPEC meeting, which is 2 months away in Vienna. It just seems to be, a number that OPEC are certainly considering. That meeting in Jeddah over the week, last Friday, they're mooting that sort of number. They're saying, the 80 to 85 for Brent. It's edging higher. And at the present time, you'd have to be, I suppose, more bullish from a trading perspective. And it's considerable what the rig count's going to be over the next couple of weeks and months in the US, because, higher prices is going to bring all of the guys back to the market. And I think they'll be producing at record numbers going forward in the next, over the next 3 to 6 months from a US side. So, let's just see what happens in the next, 6 to 8 weeks. But at the moment, yes, higher and possibly 80, 82, 83.
Well, aluminum is something that has been buzzing quite a bit. And what is your sense on that? Because the kind of back and forth that we have seen US do in sense of sanctions, in sense of trade relations, etc., with various countries seems to have impacted a lot of metals, especially aluminum. How would you want to look at the ranges there?
I've read the articles and I'm across the news side of it, and that big spike the other day of around about up 9% was nothing short of breathtaking, and it took a number of the other metals up with it, and then overnight you go to sleep and you wake up and you see a move to the downside of 6 or 7%, and there's talk that maybe they won't be absorbed and they may not be as hard from those sanctions from the US side, and Trump may back off on them a little bit. It just seems to be so many conflicting points, and it's a little bit like the Chinese, the tariff situation. They're gangbusters to start with the US and, and what they wanted to achieve, and that's also, rolled across to the aluminium and base metal markets. So it just seems to be a level of confusion out there, and that creates, I suppose, the volatility in the market and the trading conditions. So at the present, you would have to say that, if they're backing off on them a little bit, there's probably further downside for a lot of those metal markets.
Point taken. Peter, as you pointed out, US really seems to be creating a lot of volatility. There have been lots of events there. Would you say that US clearly is in the eye of the storm, whether we're looking at Syria or Iran or Russia or even China for that matter? So when you look at the global markets, what is it that you would be following as we see in sense of fundamentals?
This seems to be the modus operandi of President Trump. He's across all points of the compass, and he creates uncertainty via Twitter, and that seems to be the way that the market absorbs his point of view or consideration on something, and it creates again that the volatility. Have a look, but in some ways you've got to say he's a deal maker, because this could be the first time you're talking about, let's look at North Korea. Within the next few weeks, he may be meeting their leader somewhere, either in Switzerland or Sweden, I see, and that's the first time that this has ever happened. So he does make things happen. China was certainly on the back foot when it came to those, as far as tariffs. They retaliated, and now there could be some sort of, negotiations moving forward. The oil situation's the same. He's certainly not scared of confrontation. And in a true entrepreneurial fashion, that seems to be the way that most entrepreneurs, deal in everyday life. They're confrontationists, they look for opportunity, and they create confusion to the other side and then come back to negotiate a path forward. So we've just got to get used to, that's the way that he operates. And we've got a few more years of it yet. If he gets re-elected, you've got another 6 years, or 6.5. Going to be a volatile time, that's what I'm going to say. Volatility's here to stay.
Yeah. Peter, one word on the currency as well, because the currency play also seems to be working its way in case of commodities. And while, of course, we started this year, the first quarter, with a weak US dollar, the last couple of sessions perhaps have been positive. We are trading at 2-week highs when it comes to the US dollar. What is that you're watching on that?
Gee, it's a hard one to pick. You know, if you're looking at a chart from a fundamental side, you'd probably say it should edge higher with, you know, possibility of further rate hikes. You know, you might see a 92 handle for the US dollar index. I would say it was oversold, and that's no doubt over the last month when you look at it. And it's rallied very strongly to the upside in the last, you know, 4 to 6 weeks. So I would say that you've probably got momentum on its side, and it'll continue. If you get a rate hike in the next, you know, 1 to 2 months, it'll edge up higher from there, and bond yields will go up, and it'll just be, you know, game on for the US dollar.
All right, Peter, really appreciate you joining us and answering all our questions. So some more strength continuing for crude oil prices and some more profit taking for the metals as a space is what he really seems to be thinking.
17 points on the Nifty. We're at about 10,601. The mid-cap index is up about 0.25%. So in line with large caps, the bank Nifty is up about 1/3%. I mean, IT and metals are having a poor day. Otherwise, you've got about 4 or 5 indices which are up. I mean, energy, pharma, and a few others which are up about between 0.5% to 1%. All in all, it's pretty quiet, like what the global picture has been overnight and this morning in Asia as well. So we were talking before we took that break, the story on Fortis. So IIAS, which is a well-regarded institutional investor, I mean, they advise on corporate actions, etc. They've come out with a report on Fortis, and they're essentially questioning the legitimacy of the Fortis board. Remember, I mean, a few other people have also come on and said that the board may not have the authority, the moral authority to decide on matters like who should come on, who should buy the company. But this is now coming in from IIAS, and they're saying a bunch of other things as well. Nisha is here. She's accessed that full report. She's joining in with the crux of the report. Nisha.
Thanks for that, Prashant. So it all really started with the large financial institutional investors who really questioned the legitimacy of the board. Now IIAS goes a step ahead and questions the legitimacy of the independent panel, which has been institutionalized for the sale process as well. So they're saying that while the board is under question, how can they have a fair and independent process for the sale of Fortis as well? Now, they not only questioned it, but also have linked the entire connections between the board members, the group, as well as the 2 people who have been brought on board in the last board meeting of Fortis Healthcare. So Rohit Bhasin as well as Deepak Kapoor, who's going to head this expert committee, which is supposed to give that fair and independent advice to the board for the final bidder or the buyer of Fortis Healthcare. They both have been associated with PwC, and PwC has been for a long time the auditor of another group company, Religare. Not just that, they have also questioned Standard Chartered Bank, which has been there for aiding this particular advisory committee for taking their final decision on the Fortis sale matter. And Stancy Private Equity Fund was invested in Fortis and has had a substantial stake of 3%. So what they are trying to establish over here is that while the investors have already questioned the board on the legitimacy because they are close aides of the group and the ex-promoters, the Singh brothers, they have also questioned this particular independent panel, which is also closely in some way related, and therefore the entire process for the sale of Fortis may not be as independent. And they have said that there is a trust deficit which is widening with the shareholders of Fortis Healthcare. And finally, they've ended the note with a very scathing warning coming in, and they have said that if the board continues its current path, we may see another unprecedented event, and that is an Indian class action suit, Prashant.
Yes, absolutely. I think we had already, we had JN Gupta who had already spoken about this particular issue. And I think, Prashant, you and me had discussed this with Mr. JN Gupta just a couple of weeks or a week back, that the board itself has too many connections with the ex-promoters. So, you know, there should probably be a reconstitution of the board. And we've discussed this ad nauseum. But nonetheless, let's see what happens. As of now,
so one is corporate connections and board connections, but I think Nisha reported yesterday that there is another thing, which is that the board is now saying that TPG Manipal will have something which is called a right to match.
Yeah, that's a googly coming in the picture.
So whoever,
what
does it mean really? I mean, so anybody comes up with an offer?
Yes. So the final word will be with TPG Manipal if they want to match any offer that really comes on the table for buying out Fortis Healthcare. And this particular right to match has been with them since they were in exclusive talks with the board, and they had an agreement with the board. Remember, they even announced the transaction, and coming under fire from the shareholders and many other questions were being raised. So therefore, it went ahead with more bidders coming into the fray. But TPG Manipal refuses to waive the right to match by way of its earlier agreement with Fortis board. In fact, Fortis board, as I gather from sources, had even requested them to waive this particular right of theirs, but they've refused to do so. So if today, by the end of today, if any more binding bids come, which are improved and revised versions and are higher than TPG Manipal gets 5 days to really act upon it. So two questions here. Will this particular right to match be a deterrent for other players like IHH, Fosun and KKR Radiant to come in and put in a bid because they know that the competing party can really match it and take away the company? And second important question is, will the Fortis board be able to take the final decision on 26th of April as they had said? Because if 5 days have to be given to TPG Manipal, then they will have to probably push it. But ball will be in the court of TPG Manipal, which was the first one to transact with Fortis Healthcare.
And not only that, I just want to point out that if in case today is already the 24th of April that we're talking about, the particular panel has to come out with a decision on the 26th. If in case there is an offer which becomes non-binding to binding overnight, which is basically by tomorrow evening, you're saying that you only have 24 hours to consider that particular bid. So in all likelihood, there should be probably some delay of the panel's decision in any case, which would probably
for
happen.
that they had given a date, 24th April, 6 p.m. evening is the finally cut-off for any of the binding bids. And tomorrow, after that whole day, the advisory panel is supposed to review it. That's all the time they have and give their opinion. And 26th of April, they have to take the decision.
Exactly,
that's a time-bound manner in which they
so
want.
after the deadline, you get another 5 days. TPG Manipal gets another 5 days.
After a bid comes in. So if another bid comes in, then TPG Manipal will have to be given 5 days. It's upon them. If they revert back in 1 day, 2 days, do not use this right or go ahead with it.
Just a quick point. It might prima facie seem unfair to other bidders, right? But for shareholders, it's not particularly minority shareholders. It's not a bad thing. I mean, they're basically trying to go for the highest bidder.
Yes, and it won't be bad, but if it becomes a deterrent for higher bidder to come in, then it could be a bad thing. But on the other hand, TPG Manipal did not have a break fee clause. So this is the expense that the Fortis board will have to pay because they had gone ahead and agreed signed the deal with them.
So but they don't know what the amount involved, etc. They don't have an agreement.
They do not have a break fee, in my understanding, but they have the right to match.
Okay, well, it'll be interesting to see what exactly happens in the next 2 days and which offer actually turns from non-binding to binding as well, and whether the likes of IHH, etc. will actually manage to put the money on the table. But thanks, Nisha, for that. Let's get talking about the technicals of the market then. We have Ashwini Gujral with us. Ashwini, hi, over to you. So for the Nifty, what would you be recommending, as well as anything incremental on metal stocks?
Metals had a huge rally. Today they are correcting, but something else is happening. Now, the energy space is picking up. So Reliance has made a fresh, strong move. And I believe that as crude prices now move further, Reliance, the oil part of it, could really get into the play. And often when crude goes up, markets also go up because oil stocks are fairly heavily weighted in all indices. So that could take the Nifty beyond 10,600, 620. So that way, I think even HDFC is moving up. So there is probably some action happening on both these large caps. So I'm not very bearish on the market. In fact, I believe that a breakout is imminent, and if not today, tomorrow, in the next 2, 3, 4 sessions it should happen. So that way people should remain long on Nifty, Bank Nifty, and this Reliance move is shaping up to be fairly interesting. As far as individual stocks are concerned, RIL is a buy with a stop of 948, target of 970. Dredging Corporation is a buy with a stop of 666, target of 690. And HDFC is a buy with a stop of 1830, target of 1885.
Okay, we've got some questions, Ashwini, coming your way. Arundhati wants to know which stock out of these, which is Bajaj Finance and HDFC Bank, is a good buy at current price levels for a period between 1 to 2 years. She wants to buy 50 shares of the stock that you recommend. I mean, so both are top quality. One is a great NBFC, the other is the top bank, basically. Ashwini.
There is a difference. HDFC is more, an older Tendulkar type company. This is Virat Kohli, Bajaj Finance. But the way to buy is to buy 5 shares every month for the next 1 year. So they'll kind of give you an average, because Bajaj Finance has gone up about 20% odd. HDFC probably will underperform Bajaj Finance. That is the sense I have. But both are good, as you said.
Okay, well, one more, Ashwini, for you. Swati has 700 shares of South Indian Bank at 30 rupees. Wants to know if she should add more at current price levels or move to HDFC Bank.
Well, South India Bank hasn't really done too much. I don't know when it will do that. But HDFC Bank will probably give you 10-15% style return on an annual basis. I think Yes Bank is moving fairly sharply, and this is the kind of stock when it starts doing well gives you 25-30%. So from a South India, I think a Yes Bank is a superior quality stock and just about coming out of a correction. So I would move there, although HDFC Bank is also fine if you are okay with lower returns.